Cramer, welcome to Mad Money. Welcome to Cramer. I'll be my friends. I'm just trying to make a little money. My job, not just to entertain, but to educate, teach it. Call me at 1-800-743-CBC. Tweet me at Jim Cramer. Maybe you hate Jay Powell. Maybe you love him. Maybe you have no idea who he is. Regardless, what you need to know is that he's in charge of the Federal Reserve. So he controls what's known as short rates. That means the short-term interest rates there are like the ones you borrow today and pay you back tomorrow. The president points to the head of the Federal Reserve, and in this case, it was President Trump who hired Powell during his first term. Trump now thinks Powell's doing a terrible job because he won't cut interest rates. So the president takes jabs at him every chance he gets. Unfortunately, this presidential obsession has a lot of impact on the markets. Today, for example, we got hit on rumors that Trump will fire Powell, and then the market came back when the president said it's not true. Dow only gaining 231 points, S&P advancing 0.32%, NASDAQ climbing 0.25%. Now, I thought the sell-off on the rumor and the sharp rally on the news of the president letting Powell alone was dispositive, and I'm going to tell you why. Bye. The president wants Powell out, but when we got a whiff of the rumor that he'd take action, longer-term interest rates went up, with the sacred 30-year Treasury going from 4.97% to 5.07%. Now, that was done in an hour. I know it's small, but you know the direction. The direction is for interest rates to go higher. Bad. At the same time, the S&P 500 went from 6,254 to 6,201 on the rumor, but then rallied back to 6,263 after the denial. Good. So clearly the stock and bond markets don't want Powell getting ousted. That's night and day, right there. Boom. Now, is Powell the issue here, or is it that Wall Street's terrified of the idea that the president might be able to fire the Fed chief, something he's not supposed to be able to do? Legally, he doesn't have the authority, but the Republicans control all three branches of government right now, and Trump's their guy. Of course, there are still institutions that are concerned about Federal Reserve independence, but they're financial institutions, not the political ones. The financial institutions don't have as many divisions as the political ones, and they never will. What is rarely talked about is why Powell even bothers to stay. What's the point of taking this? Now, as someone who's had his share of national ridicule, it's not something you look forward to. But when you look at the action in the stock and bond markets today, how we went down when the rumor was first floated and went up when the president walked it back, it's worth asking why stocks didn't soar when we thought Powell was getting fired. Soar. Stocks are supposed to benefit from lower interest rates, right? You cut rates, you get better business formation, you get stronger employment, housing market gets stimulated by teaser rates. So why didn't stocks blast off when we heard Powell, who is standing in the way of all that, was sacked? Why didn't the market go up? Legit question, one that I think the president has to be pondering. But therein lies the problem. The market, at least today, is saying that Trump might be very wrong about firing Powell. What's the case for firing this man? We spoke to presidential advisor Peter Navarro last week, and he thinks a good reason to fire him is that he's got a terrible track record, according to Navarro. 2018, Powell took rates up in the face of incipient weakness. 2021, he didn't take rates up because he thought that inflation was transitory. I'll admit that Powell's not perfect. Nobody bats 1,000. But we have to ask, should we judge him harshly for holding rates steady right now? Or to put it another way, why hasn't Powell started cutting rates again? We had a cooler than expected PPI number today. That could make it easy to justify a rate cut, right? But how about inflation? The incredibly important consumer price index from yesterday had some prices that had some signs of inflation from the president's tariffs. Higher prices for clothing, furniture, cleaning products, food away from home, meats, poultry, coffee, gasoline, even soft drinks. That's a long list. Now, is the tracing right? Appliances and canned fruits and vegetables went up because of tariffs for certain. We know from Conagra that the price of tin cans went higher. Tariffs on aluminum make cans, including soda cans, more expensive. Korean and Chinese appliances went up in price because of that steel tariff. That helps give Whirlpool an edge, but it hurts you because you're going to have to pay more. Coffee, imported, so the fall of the tariffs. Meat and poultry, that's more problems with the herds and flocks. Furniture, the move out of China raised prices. Same thing with clothing. Tariffs are the issue. Against all this, though, if you know where to shop, not something that they put in these numbers, Amazon, Walmart, TJX, Costco, the prices are tame. Come on. Score one for the president. However, we don't know how high the tariffs are going to go, and he seems to roll out new ones every day. We don't know if there's going to be doublings or even triplings on some countries. We haven't seen the car and truck tariffs that we all fear. We haven't seen how much the imported parts of a house drove up the price of homes. We're nowhere near finishing tariffing. And that's what Powell wants to wait for. That's why he's on hold. He's prudent. Score one for Powell. So what's the case against Powell's patience? If you believe the economy's about to fall apart, then there's no time to wait. But we just heard from the big banks over the last 2 days, and not one of them said the consumers hurt. A lot of that's because it's still incredibly easy to find a job. Sure, there are lots of layoffs at the banks themselves, but there aren't a lot of white-collar workers without jobs. I find it very hard to worry about a downturn when employment's at 4.1%. That's the problem with President Trump's position. The Fed's supposed to cut in a slowdown, but we don't have a slowdown. And the only thing that might cause one is the president's tariff policy. It's paradoxical Mexican standoff. If Powell doesn't wait, if he cuts, front-running the August set of tariffs, he'd be caving. And if he's wrong, he'll look like a fool. He has absolutely no reason to cut other than to stop the heckling. What's in it for President Trump if he tries to fire Powell? I think we saw it today. Nothing. The stock market would get rocked. Long-term interest rates would rise. What president would want that to happen? If I were President Trump, I'd wait to see what happens with his tariffs. As long as inflation's stable 2.5 months from now, then by all means, bash Powell for refusing to cut rates. But today should have been a real wake-up call. For who? For the president. He does himself no favors if he fires Powell. Even if you thought Powell was a doofus, which he most decidedly is not, you would still be fighting all the usual enemies who cherish the Fed's independence. I'm one of them. It's been good good policy for our great nation. It's worked. Ain't broke, don't fix. So, Mr. President, write down this one, May 15, 2026. That's when Jay's done. His loyalty is clear. It's to the country. You can't beat that. Plus, this whole rap about how Powell may have spent too much money on the Federal Reserve renovation. What is he like? That guy is like it's not his house. Trump's credibility is hurt by this. Does Powell look like a guy who cares about this stuff? Does he look like a contractor? Honestly, the guy's so intense about his job that if you told me he didn't even choose the color of paint in his own office, I'd believe you. Bottom line, I hope today is the last day that Trump goes after Jay Powell, whose term ends in 10 months anyway. Got it for Powell only hurt Trump the same way it hurts the markets. And I don't think the president's a masochist. At the end of the day, we're either going to see more inflation or not. If inflation really does pick up, firing Powell won't matter because the rest of the Federal Market Committee won't let him cut either. Mr. President, sometimes, this is genius by me, it's better to leave well enough alone. Hey, let's go to Tom in Illinois, please. Tom!
Hey, Jim, thanks for taking my call.
My pleasure. What's up?
I wonder what you think about Sony. I know the government's coming after Japan with tariffs. How do you think that'll affect the stock?
I don't want to be there. I don't want to be there because I think Japan's going to get the brunt. Too many soldiers there. We've done too much for them. I think that Japan and Korea, the next wave, is what I think that Jay Powell's worried about, too. The next wave is going to be really, it's just going to be, Sell.
The House of Pain.
Let's go to Rick in Illinois, please. Rick.
Jimmy, how are you today?
I'm having a pretty good day. How about you?
It was okay, except for this Powell announcements during the day. It's a little bit upsetting, but we move on. Jim, I've been an acolyte of yours since Cramer and Kudlow.
No, that's not possible because it was Kudlow and Cramer. I lost a coin flip. I wanted Cramer and Kudlow. I mean, let's just tell the truth. After 25 years, it's time to tell the truth. I wanted Cramer and Kudlow. So did my dad. All right.
So did I.
What else? What else? Yeah.
And
what can you do?
now I'm a member of the club. And my question to you is, what's with Micron? They reported earnings. They were outstanding, made a new high at 137, and now it's like they're going out of business.
I got to tell you, I look at it every day. Do you know I said what's with Micron 3 times today? I think that run from 70 to 130 really got people spooked. I don't know. Now everyone's talking about how the chart's bad. I'm with you. I think the stock is inexpensive, but you know what? The chart is saying we got to wait. I'm going to obey the chart. I just am. I'm going to obey the chart. And anyway, I like NVIDIA. Let's go to Anthony in Florida. Anthony.
Hey, Jim, I just want to tell you I'm a member since day one, and I love the 1020 leads. I do not miss them with you and Jeff. They're really great.
Jeff works really so hard. Jeff, when he goes out to lunch, he goes out for like 30 seconds. It's incredible. The guy is so intense. I love it. I sit right next to him, and he is so dedicated to the club. It is fantastic. He's dedicated to you. How can I help?
Oh, I appreciate it. I'm 60 years old, and I still got some time to stay in the market, and I want to get some dividends. And Verizon is my company that I have. What do you think about Verizon with a 7% dividend?
I think it's okay. It's really just a bond. I mean, there's a lot of competition now in the telco business. You know, I wrote this book. I wrote this book, How to Make Money in Any Market, and I had to default to a lot of the real estate investment trusts and to a lot of the master limited partnerships in the oil market. Those are the only place where I see really great value in dividends right now because the stock market has run so much. It's a quandary, but those are the way to be able to answer the quandary. All right, look, I'm hoping President Trump cools it with the too late Powell rhetoric. I find it seems too insulting for me. At this point, I think he's only hurting himself. And, of course, the markets, too. On Mad Money tonight, with earnings season kicking off, as always, with the financials, I'm digging through the top and bottom lines of all the reports and giving you my take on the big banks. Then lots of surprising stocks have been rallying lately, but I found one that I think takes the cake. I'll reveal what it is and whether you should take a cut of the cheese. And we have the big banks reporting strong numbers. But what about the regionals? I'm getting the latest with the top brands first Verizon. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.